All right, so you're ready to launch your business,
Exciting.
but you also want to make sure you've got the funding to really make it happen.
Yeah.
And that's exactly what we're diving into today.
Okay.
Crafting a business plan that doesn't just sit on a shelf,
Right.
but actually attracts those investors that you need.
Yeah.
We've got a stack of sources here,
Oh, clever.
all about what makes a plan truly bankable.
Nice.
And to help us unpack all of this,
Okay.
we've got expert speaker who can really see the big picture when it comes to business strategy.
Oh, well, thank you.
So a business plan, it's not just a formality, is it?
It's really not. And I think that's a big misconception a lot of people have.
Yeah.
It's really your opportunity to demonstrate why your vision is worth investing in.
I think so many people just assume it's just a document you need to check off a box.
Oh, yeah, for sure.
But our sources really emphasize that this is your chance to tell your story.
Yeah.
Get investors excited about your idea.
And address their concerns,
Yeah.
because remember, they're looking for a solid return on their investment,
Uh-huh.
often in the range of 20 to 30% annually.
Wow.
Yeah.
That's higher than I would have guessed.
It is.
No wonder they scrutinize these plans so closely.
Exactly. They want to see a clear path to profitability, but it goes beyond just the numbers. They're
Right.
also evaluating you,
Oh,
your passion, your experience, your ability to actually execute this plan.
So one source outlines what they call the 6 immutable points that investors look for.
Oh, interesting.
Have you heard of these before?
I have, yeah. These are crucial because they address the core questions investors have.
Okay.
Can this business actually make money?
Mm-hmm.
Is this entrepreneur trustworthy? Can they actually pull this off?
All right, so let's dive into those points.
Let's do it.
First up, profit is the focus.
Okay.
That seems pretty straightforward.
It might seem obvious,
Yeah.
but I've seen so many business plans get bogged down in the details,
Right.
and they lose sight of that bottom line.
They forget about the money.
Yeah, investors need to see that generating a profit
Yeah.
is your top priority.
Okay.
How will you price your products or services to make sure there's a healthy margin?
Uh-huh.
What are your strategies for controlling costs?
Right.
These are the questions your plan needs to answer.
Next is, you were honest.
Okay.
Okay. This is about transparency, right?
Absolutely. It's about building trust. Investors are taking a risk on you and your vision. So they need to feel confident that you're being upfront about your experience,
Uh-huh.
both the successes
Yeah.
and the failures.
Okay.
Don't try to hide your weaknesses
Yeah.
or gloss over those past challenges.
So be honest about the risks involved,
Yes.
but also how you've learned from your mistakes and how those lessons will make you a stronger entrepreneur.
Exactly.
That makes sense. Honesty can be a powerful differentiator, especially in a world where everyone's trying to present this perfect image.
That's right.
All right, the next point is you are qualified. So this is where you showcase your expertise, right? Mm-hmm.
Yes, this is your chance to really shine.
Okay.
Highlight the skills
Okay.
and experience that you bring to the table.
Right.
Have you worked in this industry before?
Okay.
Do you have a track record of success in a related field?
Uh-huh.
Have you built a team with the necessary expertise to kind of complement your own?
Yeah.
Investors want to see that you're not just passionate,
Yeah.
but you're also capable.
Now, what if you're lacking experience in a particular area? Okay. Should you try to downplay that?
Not at all.
Okay.
It's better to acknowledge any gaps in your knowledge or experience.
Okay.
And then explain how you will address them.
Okay.
Maybe you'll partner with someone who has the expertise you lack,
Mm-hmm.
or maybe you'll commit to ongoing training and development.
Right.
The key is to show investors that you're aware of your limitations
Okay.
and that you have a plan to overcome them.
Yeah.
This demonstrates a level of self-awareness that investors find reassuring.
All right. Next up is you have the commitment. I guess this is about showing that you're truly passionate about your business.
It goes beyond passion.
Oh, okay.
It's about demonstrating that you're in it for the long haul,
Okay.
that you're willing to put in the hard work and make the sacrifices necessary to succeed.
Right.
Investors want to see that fire in your belly that tells
Yeah.
them
Uh-huh.
you won't give up when things get tough, because inevitably
Right.
they will.
So how do you convey that level of commitment in a business plan?
It's about the details.
Okay.
How much of your own money are you investing?
Okay.
What personal sacrifices are you making to pursue this venture?
Ah.
What steps have you already taken to move the business forward?
Okay.
Actions speak louder than words.
Don't just tell them you're committed. Show them.
Exactly.
All right. The next point is your idea is unique. This one seems tricky. How do you convince investors that your business truly stands out from the crowd?
Yeah, that's the big question, right?
Yeah.
It's where you differentiate yourself. What problem are you solving that no one else is addressing?
Mm-hmm.
What unique value proposition
Right,
are
yeah.
you offering to your customers?
Okay.
Don't just say you're better or cheaper.
Right.
Explain why.
Yeah.
What specific features or benefits set you apart from the competition?
Okay.
And importantly,
Yep.
back up your claims with market research.
Uh-huh.
Show that there's a real demand for your product or service,
Okay.
and that you've identified a target market that's eager to buy what you're selling.
So it's not enough to have a great idea. You need to prove that there's a market for it.
You got it.
And finally, we have, you can execute. This is where the rubber meets the road, right?
Yes, this is where the magic happens.
This is about showing that you can actually deliver on your promises.
Precisely. You've got a great idea.
Uh-huh.
You've identified a market.
Right.
Now you need to convince investors that you have a solid plan to make it all happen.
Okay.
This is where your operational plan comes in.
Right.
How will you manufacture or deliver your product or service?
Okay.
What are your key milestones and timelines?
Uh-huh.
Have you secured the necessary resources,
Right.
including equipment, facilities, and personnel?
Okay.
Have you established clear processes and systems to ensure efficiency and quality control?
Okay.
Investors need to see that you've thought through every aspect of your operation,
Yeah.
and that you have a realistic roadmap for execution.
So it's not just about having a vision, it's about having a plan.
That's right.
These 6 immutable points are really helpful in framing what investors are looking for.
I think they're a great starting point for crafting a compelling business plan.
Okay.
But remember, it's not just about checking off boxes.
Yeah.
It's about telling a story that captures the investor's imagination
Uh-huh.
and convinces them that your business is worth betting on.
I think a lot of entrepreneurs get so caught up in the numbers
Yeah.
that they forget about the human element.
You're absolutely right. Investors are ultimately investing in people.
Yeah.
They want to see passion, commitment, and a clear vision for the future.
So we've talked about these key points investors look for, but our sources also emphasize that it's not all about those 6 points.
Right. There's more to the story.
Yeah.
Investors are also evaluating the bigger picture.
Okay.
Your management team,
Mm-hmm.
your organizational structure, your plans for growth.
And they want to see that you've thought about how your business will impact other stakeholders, like your lenders, your suppliers, and your employees.
All those people who are crucial to your success.
Let's dive into that next.
Okay. Thinking about your lenders, suppliers, and employees is key. After all, they're all part of your success story lenders. For example, they need assurance that they'll be repaid.
It's all about minimizing risk for them.
Exactly.
So how do we demonstrate that in our business plan?
It's about showing them you've got multiple avenues for repayment, profits, assets, even a personal guarantee if needed.
Oh, wow. Okay.
But even more importantly, it's about projecting a clear understanding of their perspective and demonstrating a solid plan to ensure their investment is secure. No lender wants to feel like they're taking a gamble.
That makes sense. What about suppliers? Why should they care about our business plan?
Suppliers are your partners.
All right.
They provide the materials or services you need to operate.
Yeah.
Your plan needs to demonstrate that you've thought about this relationship.
Okay.
Have you secured reliable suppliers?
Mm-hmm.
Have you negotiated favorable terms?
Okay.
Do you have a plan for managing your supply chain effectively, even if there are disruptions?
So it's not just about finding the cheapest supplier.
It's not just about price.
It's about building those strong, reliable partnerships.
Exactly. Show them you're a trustworthy partner who will honor commitments and pay invoices on time.
Yeah.
A track record of good relationships with suppliers can be a huge asset to your business.
And then there are your employees.
Yes, your team.
Happy employees are essential for a thriving business.
For sure.
But they're also looking for certain things, right?
Of course they want fair pay, a positive work environment,
Yeah.
and opportunities for growth.
Yeah, makes sense.
Your business plan should address these points.
Okay.
Highlight your company culture,
Uh-huh.
your commitment to employee development, and the benefits you offer.
One source even suggests including information about your plans for creating a diverse and inclusive workplace.
That's a great point. Investors are increasingly looking at factors like diversity and inclusion as indicators of a company's values and long-term sustainability.
Yeah.
It shows you're building a company for the future.
Okay. I think we've covered the stakeholder piece pretty thoroughly.
I think so.
Now let's shift gears and talk about crafting a winning strategy for your business.
What?
This is where things start to get really exciting.
The fun part.
Yeah.
This is where you define how you're going to position yourself in the market
Okay.
and achieve a competitive advantage.
Okay.
One source really emphasizes the importance of being outwardly focused,
Okay.
understanding your customers,
Mm.
competitors,
Yeah.
suppliers,
Yeah.
and even the regulatory environment.
They use this great analogy. A winning strategy is like a ship navigating a complex sea.
Oh, I like that.
You need to understand the currents, the winds, and the potential hazards to chart a successful course.
Exactly. You need to anticipate challenges, adapt to changing conditions, and constantly be looking for opportunities to gain an edge.
So are there different types of business strategies?
There are.
What are they?
There are two fundamental categories of business strategies that most companies fall into:
Okay.
low-cost leadership and differentiation.
So low-cost leadership is basically about being the cheapest, right?
Good. Companies like Walmart have mastered this approach.
Yeah.
They leverage their enormous buying power to get the lowest prices from suppliers, and they've streamlined their operations to be incredibly efficient.
So they can offer lower prices than their competitors.
Exactly.
But one source cautions that this strategy can be tricky for new businesses.
It can be.
It's hard to compete on price when you don't have the same scale and buying power as the big players.
That's true. A price war can be a dangerous game for a startup.
Yeah.
It's often more effective to focus on differentiation,
Right.
highlighting what makes your business unique and appealing to a specific target market.
So differentiation is about standing out from the crowd.
Exactly. Think of companies like Apple, Starbucks, or even a local craft brewery.
Okay.
They've differentiated themselves by offering something special, whether it's innovative products, exceptional customer experiences, or a unique brand identity.
So they're not competing solely on price, but on value.
That's right.
One source breaks down several ways to
That's
differentiate.
interesting.
Speed, convenience, customization design, brand image, and reputation.
Those are all great points.
Yeah.
Let's take speed as an example.
Yeah.
Companies like Amazon have built their entire business model around speed and convenience.
Yeah.
They've invested heavily in logistics and technology to deliver products faster than anyone else.
They're really good at that.
That's a powerful differentiator in today's fast-paced world.
Convenience is another big one. Consumers are willing to pay a premium for products and services that make their lives easier.
Absolutely. Think about meal delivery services, ride-sharing apps, or even just a grocery store that offers online ordering and curbside pickup.
Yeah.
These businesses are thriving by removing friction points and making things easier for their customers.
What about customization?
Customization is all about tailoring your product or service to meet individual customer needs.
Okay.
Think about personalized clothing, bespoke furniture, or even software that can be configured to specific user preferences.
So it's about offering a product or service that feels uniquely tailored to the individual customer.
Exactly. It's about making the customer feel like they're getting something truly special,
Yeah.
something that's made just for them. This can command a higher price and build strong customer loyalty.
And then there's design. Good design can make a product more appealing and desirable.
Think about Apple products' high-end fashion or even just a well-designed website. Design is about aesthetics, but it's also about functionality and user experience.
Right.
A well-designed product is not only beautiful, but also easy to use and enjoyable to interact with.
A strong brand image is also crucial in today's competitive market.
Your brand is your promise to customers. It's what they think of when they hear your company name or see your logo.
Okay.
A strong brand image conveys trust, quality, and reliability.
Right.
Building a positive brand image takes time and effort,
Yeah.
but it's a powerful differentiator.
And finally, we have reputation.
A solid reputation is built on trust, transparency, and delivering on your promises.
Yeah.
Word of mouth, online reviews, and industry awards all contribute to building a good reputation.
So we've talked about different ways to differentiate, but how do we actually choose the right strategy for our business?
That's where a SWOT analysis comes in.
SWOT stands for strengths, weaknesses, opportunities, and threats, right?
That's right. A SWOT analysis helps you identify your company's internal strengths and weaknesses, as well as external opportunities and threats.
Got it.
It's a great tool for assessing your competitive landscape and developing a strategy that leverages your advantages and mitigates your vulnerabilities.
So how do we actually conduct a SWOT analysis?
It's a fairly straightforward process.
Okay.
Start by brainstorming a list of your company's strengths.
Okay.
What do you do well?
Mm-hmm.
What resources do you have?
Okay.
What advantages do you have over your competitors?
Got it.
Then do the same for your weaknesses.
Okay.
Be honest with yourself about your limitations.
Yeah.
What areas need improvement?
Mm-hmm.
What resources are you lacking?
Okay.
What are your competitors doing better than you?
Once you've identified your internal strengths and weaknesses, you move on to the external factors.
Exactly. Next, brainstorm a list of opportunities.
Okay.
What emerging trends could benefit your business?
Mm-hmm.
Are there any new markets you could enter?
Okay.
Are there any partnerships you could form that would give you a competitive edge?
So then you consider the threats?
Yes. What external factors could negatively impact your business?
Okay.
Are there any new competitors entering the market?
Mm-hmm.
Are there any changes in regulations that could hurt your business?
Okay.
Are there any economic trends that could impact your sales?
So once you've completed your SWOT analysis, you can start to develop a strategy that capitalizes on your strengths, addresses your weaknesses, exploits opportunities, and mitigates threats.
Exactly. The SWOT analysis gives you a framework for making strategic decisions and developing a roadmap for success.
Uh-huh.
Investors appreciate seeing this level of strategic thinking
Yeah.
because it shows that you've thought carefully about your competitive landscape
Okay.
and that you have a plan for navigating the challenges and opportunities that lie ahead.
Okay, so we've chosen our strategy now. How do we make sure we're reaching our target customers?
That's a great question.
That's where marketing comes in, right?
Absolutely. Marketing is all about communicating the value of your product or service to your target market and persuading them to choose you over the competition.
But one of our sources really emphasizes that it's not enough to just throw money at marketing.
No, it's not.
You need a focused plan.
Yes.
Based on solid research and testing.
I can't tell you how many business plans I've seen with vague marketing strategies that lack a deep understanding of the target market.
Uh-huh.
They just say things like,
Yeah.
we'll use social media and advertising.
Right.
But they haven't thought about which platforms are most effective for reaching their target audience.
Yeah.
Or what kind of messaging will resonate with those customers.
One source uses this hilarious example of Howie's House of Hubcaps.
Okay.
A business that specializes in vintage Chevy hubcaps.
Aye.
Imagine Howie spending his entire marketing budget on a Super Bowl ad.
Oh my gosh.
It would be a complete waste of money because the vast majority of Super Bowl viewers aren't interested in vintage Chevy hubcaps.
So breaching to the choir.
Right. Instead, Howie needs to focus his marketing efforts on vintage car enthusiasts.
Yeah.
He needs to find those niche publications, websites, and events where his ideal customers are already hanging out.
Exactly. That's why market research is so crucial.
Okay.
You need to understand your target customer inside and out.
Right.
What are their demographics? What are their interests?
Yeah.
What are their pain points?
Okay.
What motivates them to buy?
And once you understand your target market, you can start to develop marketing messages that resonate with them.
You need to speak their language, address their needs, and offer them solutions that they find valuable.
Our sources also stress the importance of testing your market.
It's so important. Don't just assume you know what your customers want.
Yeah.
Get out there and talk to them.
Okay.
Conduct surveys, circus groups, or even just informal conversations to gather feedback on your product or service.
One source suggests taking it a step further and actually putting sample products in stores to see how they sell.
Oh, wow.
Or making sales calls on prospective clients to gauge their interest.
It's all about validating your assumptions and gathering real-world data.
Yeah.
The more information you have, the better equipped you'll be to develop a winning marketing strategy.
Okay, so we've identified our target market and we've tested our assumptions. Now it's time to develop our marketing campaign.
Let's do it.
One source breaks down the classic 4 Ps of marketing.
Oh, yeah.
Product, price, place, and promotion.
Those are the fundamental building blocks of any marketing strategy.
Let's start with product.
Okay.
This is where you define what you're selling, highlighting its features, benefits, and competitive advantages.
Right. And one source points out that even seemingly small improvements to a product can make a big difference in the eyes of consumers.
Like what?
They give examples like making a dishwasher quieter or a deodorant that smells better.
Oh, okay.
It's about understanding those subtle nuances that can influence customer perception and make your product more appealing.
Okay, next up is price.
All right.
This is where you determine how much you're going to charge for your product or service.
Pricing is always a delicate balancing act.
It is.
You need to find a price that's attractive to customers, but also allows you to generate a healthy profit margin.
One source really cautions against focusing too much on low prices, especially for new businesses.
Right.
They argue that If you have a unique product or service,
Hmm.
you shouldn't undervalue yourself just to compete with the big guys.
It's about finding that sweet spot where you're maximizing profitability without sacrificing market share.
Now for place.
Okay.
This is all about distribution and making sure your product is available where your customers want to buy it.
Whether it's a physical storefront, an online marketplace, or a network of distributors place, is about getting your product in front of the right people at the right time.
One source uses this funny analogy of a gas station in the middle of the desert.
Oh, God.
The gas is overpriced, the service is terrible,
Yeah.
but they're the only gas station for a 100 miles location. In this case, trumps everything else.
You gotta, sometimes location is everything.
And finally, we have promotion, which encompasses all the ways you'll communicate with your target market and persuade them to buy your product or service.
This includes advertising, public relations, content marketing,
Mm-hmm.
social media, email marketing, and even good old-fashioned word of mouth.
One source makes an interesting point about free media.
Okay.
They argue that it's not really free.
I see.
They use the example of the Segway launch.
Oh, yeah, the Segway.
The Segway generated tons of media coverage when it was first launched, but that was the result of a very carefully orchestrated PR campaign
Yeah.
that cost millions of dollars.
Wow.
So even though it seemed like the Segway was getting all this free publicity,
Right.
it was actually the result of a strategic investment.
That's true, and that's true for a lot of so-called free media.
Uh,
It takes effort, creativity, and often some financial investment to generate that kind of buzz.
One source also stresses the importance of having a focused and accountable promotional plan.
It's not enough to just throw a bunch of marketing tactics at the wall and see what sticks.
Right.
You need to track your results, measure your return on investment,
Right.
and be prepared to adjust your strategy as needed.
Yeah.
What marketing channels are driving the most leads? Which campaigns are generating the most sales?
You're right.
You need to be constantly analyzing your data and making adjustments to optimize your results.
So we've talked a lot about marketing, but there's another crucial element we need to address. Sales.
Yes, closing those deals.
How do we actually convert those potential customers into paying customers?
That's where building a dynamic sales effort comes in.
Okay.
This is where you really seal the deal.
One source draws a clear distinction between marketing and sales.
Okay.
Marketing is about creating awareness and generating interest,
Yeah.
while sales is about closing the deal
Uh-huh.
and securing those orders.
Right, it's the final step in the customer journey.
Yeah.
And it often requires a different set of skills and strategies.
One source shares this great story about Bill Gates, who famously secured a deal with IBM for an operating system before he even had the product developed.
Wow.
That was a bold move,
It was.
but it highlights the power of securing those early commitments.
Yeah.
It's a great way to build momentum and demonstrate market demand to potential investors.
It shows you're already thinking ahead.
But what if you're not a natural salesperson?
Okay.
What if you're more comfortable behind a computer screen than out there pitching your product?
That's a common concern for entrepreneurs, and one of our sources addresses it directly.
Oh, good.
They advise against delegating yourself completely out of the sales process.
So even if you have a dedicated sales team,
Yeah.
you still need to be actively involved.
Absolutely. You need to understand the sales landscape,
Uh-huh.
build relationships with key customers,
Right.
and be able to articulate your company's value proposition in a compelling way.
One source even encourages entrepreneurs to get out there and make those initial sales calls themselves, especially in the early stages of the business.
It's about leading by example and demonstrating your commitment to the sales process.
Okay.
It also gives you valuable insights into customer needs and market dynamics.
You get to learn firsthand
Exactly.
what's working and what's not,
Yeah.
and you can use that information to refine your sales strategy.
That's right.
Our sources also highlight the importance of having the right systems in place to manage your sales efforts.
Yes. This includes things like customer relationship management, CRM, software sales tracking tools, and clear processes for following up with leads and nurturing those relationships.
So it's about staying organized, being persistent, and always striving to improve your sales skills.
The sources make a compelling case for viewing your sales force as a competitive advantage.
Oh, wow.
A well-trained, motivated, and customer-centric sales team can be a powerful differentiator in the marketplace.
Okay, so we've covered marketing and sales, two crucial components of any successful business plan. Now let's move on to the organizational structure of your business. How do you convince investors that you've got the right team and the right structure in place to execute your vision?
Let's delve into how to build a solid foundation for your company.
One source emphasizes the importance of demonstrating to investors and lenders that you're capable of managing and leading the business, whether it's a small startup or a larger operation.
Right. It's about showing you can scale.
They use a great example of a hypothetical client who wants to purchase a competitor's ocarina manufacturing plant.
Okay, ocarina is interesting.
Investors will want to know if you can handle this larger, more complex operation.
Yeah, for sure.
Do you need to bring in experienced managers?
Right.
How will you integrate two different workforces? How will you maintain quality control as you scale up production?
Lots of questions to consider.
So it's about showing that you've thought through the challenges of managing a growing business.
It is.
And that you have a plan in place to address those challenges.
Exactly. Investors want to see that you're not just a visionary, but also a capable leader who can build and manage a high-performing team.
One source suggests starting by identifying the key management jobs and roles within your company.
Oh, that's a good idea.
Clearly define positions like president, vice presidents, chief financial officer, and department managers. Outline reporting structures. So investors can see how responsibility and accountability are distributed within the organization.
So everyone knows where they fit in.
And even if you're a solo entrepreneur right now, it's helpful to think through these roles and how you'll fill them as your business grows.
Thinking ahead shows investors that you're serious about building a sustainable business.
Now, beyond individual roles, it's important to consider the overall organizational structure.
The big picture.
Right, because the way you structure your company can have a big impact on its efficiency and effectiveness.
Exactly. And investors and lenders are looking for a structure that makes sense and aligns with your business goals. There are 5 fundamental structures that are commonly recognized.
What are they?
Product, functional, matrix, geographic, and hybrid.
Okay, let's break those down. What's a product structure?
A product structure organizes the company around its different product lines.
Okay.
Each product line has its own dedicated team responsible for everything.
Oh, wow.
From development and production to marketing and sales.
So if you're a company that makes shoes, you might have separate divisions for running shoes, basketball shoes, and casual shoes, each with its own team.
That's a great example. This structure is common in companies with diverse product offerings. Where each product requires a specialized approach.
Okay.
It allows teams to develop deep expertise in their specific product areas.
What about a functional structure?
A functional structure organizes the company around different departments, such as finance, marketing, sales, and operations. This is a more traditional hierarchical structure where each department has its own specialized function.
This structure seems like it would be more common in smaller companies.
It could be.
Or those with a more streamlined product line.
You're right. It can be a very efficient structure for companies that don't require a lot of cross-functional collaboration.
Okay, but what about a matrix structure?
A matrix structure is more complex.
Okay.
Employees report to multiple managers, often based on project or function. So you might have a software developer who reports to both the engineering manager and the project manager for a specific software development project.
This seems like it would be common in high-tech or project-based organizations where specialized skills are needed across different teams.
Exactly. It allows for greater flexibility and collaboration.
Okay.
But can also create confusion if not managed carefully.
What about a geographic structure?
A geographic structure organizes the company around different regions or territories.
Okay.
This is common in companies with a global reach or those operating in multiple markets with distinct characteristics.
So a multinational corporation might have separate divisions for North America, Europe, and Asia, each with its own leadership team and tailored strategies. Exactly. This structure allows companies to adapt to local market conditions and respond to the unique needs of customers in different regions.
And finally, we have a hybrid structure.
A hybrid structure combines elements of multiple structures to create a unique organizational model that best suits the company's specific needs and goals.
So you might have a company that uses a product structure for some of its operations and a functional structure for others.
Exactly. It's about creating a flexible and adaptable organizational model that can evolve as the business grows and changes.
One source mentions that if your business plan requires a sizable organization, you should consider including a full organizational chart in your plan.
That's a great idea. It's a great visual representation of your organizational structure that helps investors and lenders quickly understand the reporting relationships and lines of authority within your company.
They also emphasize the importance of establishing clear means of control within the organization.
So that's things like defining spans of control.
How many employees report to each manager, establishing clear reporting procedures and implementing performance measurement systems. It's about ensuring accountability and efficiency within the organization.
One source also touches on the importance of human resource management.
This is about attracting, retaining, and developing top talent.
So it includes everything from recruitment and onboarding to training and development to compensation and benefits.
It does.
They suggest identifying key employees in your business plan,
Okay.
defining their roles and responsibilities, and outlining your compensation and benefits package.
It's a good way to show investors that you're serious about building a strong team and that you're committed to creating a positive and supportive work environment.
One source even recommends considering a board of directors or a board of advisors to provide guidance and support.
Oh, that's interesting.
Especially for new businesses.
Yeah, those individuals can offer valuable expertise, connections, and strategic insights. They can be a huge asset to entrepreneurs, especially those navigating uncharted territory.
It adds a level of credibility to your business and shows investors that you're willing to seek out and listen to expert advice.
It demonstrates a level of humility and a commitment to continuous learning.
Now, one last but crucial aspect to consider when building your organizational structure is your legal structure.
Yes, this is important.
Right, because the legal structure you choose has big implications
For
liability taxation and even your ability to raise funding.
Absolutely. The most common legal structures are sole proprietorship, partnership, LLC, and corporation.
A sole proprietorship is the simplest structure.
It is.
But it offers no legal distinction between the business and the owner.
So if the business incurs debts or faces lawsuits, the owner is personally liable.
A partnership is similar.
It is.
But it involves two or more people who agree to share in the profits and losses of the business.
Partnerships can be tricky. Because each partner is typically liable for the actions of the other partners.
An LLC or limited liability company offers some protection from personal liability. The business is treated as a separate legal entity from its owners.
This is a popular structure for small businesses because it offers a good balance of simplicity and liability protection.
And finally, we have corporations.
Corporations are more complex to set up and maintain. But they offer the strongest liability protection. The corporation is treated as a separate legal entity from its shareholders. Meaning that the shareholders are not personally liable for the debts or actions of the corporation.
One source points out that the best legal structure for your business will depend on a variety of factors, including your industry, your risk tolerance, and your long-term goals.
Right, it's a big decision.
It's always a good idea to consult with an attorney to determine the best legal structure for your specific situation.
I agree with that.
Okay, so we've talked about the operational side of the business. Marketing, sales, organizational structure. Now it's time to tackle the financials.
All right, are you ready to crunch some numbers?
Let's do it. All right, so this is where it gets real for a lot of entrepreneurs, those financial projections.
Oh, numbers.
One source really hammers home the point that accuracy and honesty are absolutely crucial when it comes to this financial data.
For sure.
They even say, and I quote, "The accuracy of your financial figures and projections is absolutely critical in convincing investors, loan sources, and partners that your business concept is worthy of support."
Yeah, they're not wrong.
No.
Inflated numbers or unrealistic projections will absolutely backfire.
Right.
Investors are savvy, they can spot inconsistencies, and will question anything that seems too good to be true. It's much better to present conservative, well-researched figures that demonstrate a realistic path to profitability.
So what are the key financial statements that every business plan should include?
Okay, so there are 4 essential ones. The income statement, balance sheet, cash flow statement, and statement of sources and uses of funds.
Okay, let's break those down.
Right.
What does the income statement tell us?
The income statement, also known as the profit and loss statement, shows your revenue and expenses over a specific period. Like a month, a quarter, or a year. It's essentially a snapshot of your business's profitability. Tells you how much money you're bringing in, how much you're spending, and what your net profit or loss is.
And the balance sheet.
The balance sheet is a snapshot of your business's financial health at a specific point in time. It shows your assets, what your business owns, your liabilities, what your business owes, and your equity, the difference between your assets and liabilities, which represents the owner's stake in the business.
What about the cash flow statement?
Oh, the cash flow statement.
I've heard that's a really important one for startups.
Absolutely.
Okay.
The cash flow statement tracks the movement of cash in and out of your business over a specific period.
Okay.
It shows how much cash you're generating from operations, how much you're investing in assets, and how much you're financing through debt or equity.
Okay.
This statement is crucial for startups because it highlights your liquidity,
Right.
your ability to meet your short-term financial obligations.
So many new businesses fail because they run out of cash,
That's right.
even if they have a great product and a solid business plan.
It happens all the time.
So managing cash flow is critical,
Yes.
especially in those early stages.
For sure.
And what about the statement of sources and uses of funds?
This statement outlines where you've obtained funding for your business and how you've used those funds.
So it shows investors how you've managed their money
Exactly.
and what you plan to do with future funding.
It demonstrates financial transparency and accountability.
One source really emphasizes the importance of clearly explaining the assumptions behind your financial projections.
Transparency is key.
Yeah.
Investors want to understand the rationale behind your numbers and see that you've considered potential risks and uncertainties.
Right.
Don't just present numbers without context.
Okay.
Explain how you arrived at those figures, what factors you considered, and what your contingency plans are if things don't go exactly as planned.
One source outlines what they call the 6 key financial assumptions.
Oh, interesting.
That every entrepreneur should consider.
Okay, what are those?
Revenue growth.
Okay, so how quickly you expect your revenue to increase?
Cost of goods sold.
The direct costs associated with producing your product or service.
Operating expenses.
Your overhead costs, like rent, salaries, and marketing.
Interest rate.
The cost of borrowing money.
Tax rates.
Your income tax obligations.
And company value.
How much your business is worth.
They also point out that these assumptions should be clearly stated and justified in the business plan.
Exactly. Don't just throw out numbers.
Right.
Explain how you arrived at those figures.
So did you base your revenue projections on market research, industry trends, or historical data from similar businesses?
Good questions to ask yourself.
Did you carefully analyze your operating expenses to make sure they're realistic?
Right.
The more detailed and transparent you are,
yes,
the more confidence you'll instill in investors.
For sure.
Now, creating these financial statements can seem daunting for entrepreneurs who aren't financial experts.
You can be a lot of numbers.
There are a lot of resources available to help with this process.
There are?
There are templates you can use.
Yeah.
Software programs like QuickBooks that can automate some of the work. And of course, you can always consult with a financial advisor or accountant for professional guidance.
Always a good idea.
But even with these resources,
yeah,
it can still be challenging to know if your financial projections are truly in line with industry standards.
That's true.
One of our sources mentioned something called the RMA data.
Ah, yes, the Risk Management Association data.
Tell me more. What is it?
Okay.
So how can it help entrepreneurs?
The RMA is an association of banks and other financial institutions that pool data from their business clients. They use this data to create industry benchmarks that banks and investors use to evaluate business plans.
So if I'm starting a restaurant, I could use the RMA data to see what the average profit margin is for restaurants in my area.
You could.
Or what the typical operating expenses are.
Exactly. You can compare your financial projections to these industry benchmarks to see how you stack up.
Okay.
If your numbers are significantly higher or lower than the industry averages, it's a red flag that you need to re-examine your assumptions.
Okay.
Maybe your revenue projections are too optimistic.
Right.
Or maybe you're underestimating your expenses.
So using the RMA data can help you create more realistic financial projections that are grounded in real-world industry data.
Exactly. It adds a level of credibility to your plan and shows investors that you've done your homework. The best part is that this data is readily available.
Oh, that's great.
The RMA publishes annual reports and has a wealth of information available on its website.
That's fantastic. I had no idea this data even existed.
It's a great resource.
It sounds like an incredibly valuable resource for entrepreneurs.
It is.
Now, we've talked a lot about the content of the business plan.
We have.
But one of our sources makes a really interesting point about the presentation.
Okay.
They say, and I quote, "The look of your business plan will create an indelible first impression."
They're absolutely right.
Yeah.
A sloppy, disorganized business plan can be a major turnoff for investors.
Oh, for sure.
It suggests that you're not detail-oriented or that you don't take your business seriously.
They stress the importance of a professional, clean presentation,
All right.
emphasizing things like neatness, accuracy, and consistency.
It's about putting your best foot forward.
Okay.
Use a clear font, consistent formatting,
Right.
and high-quality paper.
Okay.
Make sure there are no typos or grammatical errors.
Yeah, that's important.
Use visuals like charts and graphs to break up large chunks of text and make your data easier to digest.
One source even recommends spiral binding your plan.
Oh, wow.
With a clear cover sheet and a sturdy back cover.
It's a small detail, but it shows that you've put thought and care into the presentation.
Right.
It makes your plan easier to read and handle, and it conveys a sense of professionalism.
So to recap, a well-crafted business plan should include a cover page, table of contents, executive summary, a description of your business market analysis industry overview, a clear articulation of the business opportunity, a well-defined marketing and sales strategy, a thoughtful management and organization plan, and of course those all-important financial projections.
That's the recipe for a winning business plan.
Yes.
But remember, creating a business plan is not a one-time event.
Right.
It's an ongoing process.
One source even suggests creating a timeline that maps out the key milestones and deadlines in your business plan.
That's a great idea.
This helps you stay on track and ensures that you're making progress towards your goals.
A timeline keeps you accountable and helps you break down a large, complex project into smaller, more manageable steps.
Don't be afraid to revisit your plan regularly. Update it as needed. And adapt to changing circumstances. The business landscape is constantly evolving.
That's true.
So your plan needs to be flexible and adaptable.
The most successful entrepreneurs are those who can adapt to new challenges and opportunities.
Right.
And that includes being willing to adjust their business plan as needed.
Well, I think we've covered a lot of ground today.
We have.
From the nitty-gritty of financial projections to the importance of crafting a compelling narrative that captures the investor's imagination.
Lots of great information.
We've explored the key elements of a bankable business plan and shared some valuable insights and resources that can help entrepreneurs create a plan that will not only attract funding, but also serve as a roadmap for their success.
It's been a pleasure diving into this topic with you.
Yeah, me too.
I hope our listeners feel empowered to create a business plan that will help them achieve their entrepreneurial dreams.
And to our listeners, I want to leave you with one final thought.
Okay.
The business world is constantly changing, so as you embark on this exciting journey, ask yourself, how will you adapt your business plan to navigate the inevitable changes? How will you stay ahead of the curve and ensure your business thrives for years to come? Thanks for joining us on the deep dive of